Markets are at an all-time high right now. Real estate values are off the charts. Everybody's chasing the nice assets. So what do you do? Where do you go? And how do you position yourself when markets are at a peak? So interest rates are low. This is February of 2020. We've got some choppy conditions on Wall Street. We've got the coronavirus epidemic out there threatening markets and creating a lot of uncertainty in the markets. So what that's doing is that's creating opportunities in other areas. Interest rates are low right now because investors are seeking safety. They're seeking yield. So they're going into treasuries and bonds at record low levels. So that's driving mortgage rates down. It's driving interest rates down. So what you want to do as a multifamily investor, if you're buying properties, commercial or multifamily, you want to take advantage of this situation. Interest rates are at record low levels. So you want to lock those rates in and take advantage of that. And just be careful when you buy these properties. Make sure that you're not over leveraging. If you're refinancing, don't take out too much equity. Make sure that they're properly leveraged, no more than 70–75%. And take advantage of these low interest rates and lock them in for a long term, at least 10 years, so that you can weather any kind of market conditions. And be aware of your tenancy. Be aware of who your tenants are. If it's commercial or residential, know your tenants, know their profile, understand what their economics are tied to, whether or not they're going to be able to pay rent in bad times, if the markets contract, if the economy contracts and we go into recession or anything like that, which is possible. I know it doesn't seem like it when the market's booming, but it is possible. So just understand your tenant, their economics, and what they can do and their ability to weather the storm and weather a downturn. If you have all working class people in your properties and their paychecks are tied to jobs and we're losing jobs, you want to think about that and you want to be prepared for that. If you have commercial tenants and they're not recession proof and they're not internet proof, then you want to be ready and prepared for that. So think about who your tenants are, think about where your properties are, what your operating expenses are, and take advantage of the low rates. Refinance now, be careful, do not over leverage, do not guarantee debt, and be smart and make good purchases. Remember, Warren Buffett always said, you know, rising tide raises all ships, but when the tide goes out, you can see who was swimming without any shorts. So just be careful and be smart and keep your eye on interest rates, keep your eye on the Fed, keep your eye on the REITs. Don't listen to what they say, watch what they do. That's the key.